What's good, everybody? This is KG from Five Star Speculators, and I'm back with another breakdown on what's this Volatility 25. So we took a trade on the 4th of Jan, towards the downside selling. So just gonna be doing a quick breakdown on it. So we were targeting sell side liquidity from the higher time frame meaning the monthly time frame, right? So we are bearish on the monthly time frame. So on trading view, you can't, there's no monthly time frame. It starts on the daily time frame, right? So we're only going to be moving on the daily time frame. So we wanted to target sell side liquidity. And I mean, on the longer term or on the coming days, we could see price continue moving to the downside, right? So, but this was like just my initial, sell side liquidity that I was targeting. So we got a trade on this day. So I'll just mark the opening. I'll just mark the opening for the day. This we'll see that. So we had price moving to the downside. So anything that's here is going to be low resistance liquidity, right? Meaning price is just gonna trade through it and then come back and act as if this was a support, right? It's gonna come, support, it's gonna become resistance now, right? So this is the logic behind, all this. So we had this, and then if you look to the left here, we do have a inverse of VG. So this is the inverse of VG, right? So this is what we have. So we got a price dropping inside of the inverse of VG, right? So the next day price, we wanted to see like an opposing FVG being hit or opposing key level being hit, right? So all of the opposing key levels were a bit higher. All of the opposing key levels were a bit higher, where, talking about a breakup log. So this is where you would have wanted to take like a trade, right? But when you drop down to the lower time frames, when you drop down to the lower time frames, oh my God, I moved this thing. Okay, it's somewhere around there. So when dropping down to the lower time frames, so remember this is the opening for that day, right? Opening for that day. So when you're dropping down to the lower time frames, you can see that the order flow is heavily bearish. And if you can see here, we actually rebalanced, right? So there was no need for us to see price moving higher because of the 4-hour order flow. Right, we did rebalance and then price started pushing to the downside again, right? So we came inside of a daily key level. So now it's like, where is the opposing key level that I can trade from, right? Where is the opposing key level that I can trade from going to the downside? So I'd like to remove all of this because it's just making, everything seem like, yeah, just too much going on. So the opposing FVG that we, not FVG, the opposing key level that we had is this, right? Because if you can look at here, price is balanced, going all the way down. Price is balanced. So there's no need for price to go all the way up there. So we just wanted to see a continuation moving to the downside, continuation to the downside, right? Because order flow is to the downside up until price reaches this external range liquidity. So what we had here was the order block. So understanding that we hit a key level, we wanted to push to the upside, hit a key level, and then continue, hit another key level, and then come back, hit another key level, and then, up until we reach the external range liquidity. So the day started here, right? So when the day started here, we wanted to catch high of the day. So meaning high of the day is going to happen somewhere inside of this order block here. So just gonna drop to the 1 hour time frame. And on the 1 hour time frame is where, you guys are going to see structure properly. And let me just, oh yeah, let me just open these and hide this thing. Yeah. So let's continue. So this is the day that we took the trades, right? So as you can see, the order flow was bearish, right? So here we got our external range being taken, or some might call it a break of structure, whatever you want to call it, right? So get external range, and then we anticipating us to come back to an internal range and then continue moving to the downside, right? So we have this key level, which is the H4 key level. And then now you can see that we also have what? H1. Okay, it's fine. So we have a H1 FVG here, right? So we have a confluence of a H1 FVG, and then we have a H4 order block, right? So anticipating price to come back and then continue dropping to the downside. So I just refined it to like the 15 minutes time frame, drop to the 15. So I just waited on the 15 minutes time frame, and then what do I see here? What do I see here? Like looking at this whole range here, right? So normally what I do is I just mark, my premium and discount, right? So anywhere inside of this area, just above the 50%, I want to start selling, right? So if you can just look at what we had here, price was balanced all the way. So the only point where we didn't have a balanced price was here on market rate, right? The only point we didn't have a balanced price was this 15 minutes of VG here, right? So this was my anchor. So I used this as my, entry level, this, right? So hence I kind of like got a sniper. Again, it wasn't my, intention to say I'm catching a sniper today. It was just like, okay, I see a volume, not a volume, like a value gap here. And then if you look to your left, what do we have here? We have a breaker block. We have a breaker. So we have two in one. You have a breaker and you have a FVG. And then, just here, you have another order block. So it's a confluence here. It's a confluence. So taking a trade here and then having your stop loss just above the order block here, is what I did, right? So price came through the first time, missed, dropped during the day, did its thing, came back, hit the entry level, and then it started pushing to the downside. And also, this is more of an aggressive entry. It's more of an aggressive entry. Normally, I like to wait to see price hit this level and then push to the downside, and then see a break of structure, and then see some sort of a fair value gap, which is this here, right? And then that's when I'd like to say take my entry, put my stop loss above, and then start seeing price push to the downside. So this is more of an aggressive entry, but I only go for aggressive entries when I see that my stop loss is not too much, right? So if my stop loss was somewhere here around this level, it was just too much for me. I would have liked to see like some sort of a structure breakdown before I can take a trade. So I was just taking chances because I saw there's an order block, there's a FVG, and then there's a breaker block, right? So there's a confluence of key levels here, or PDRAs if you want to call them that. And yeah, guys, that's how we took the trade. And the next day we came back with a pullback, and then price continued going to the downside. So price will be in a bearish order flow up until we take out external range liquidity. So now we took out external range liquidity, we out of the trade. I mean, we could still see price push to the downside, or we could see price making some sort of a pullback and then continue going to the downside. So this is how we took the trade. And we do have like a proof of trade here again. So again, we didn't come through here saying we are trying to take a sniper. Just happened so that we got the sniper here. This is where that trade came in, and then I had my stop loss on the lower time frames, and then price started pushing towards the downside. So I'll take it back again just for you guys to see. Let me just move back to the 4-hour time frame. Let me delete these. This thing is disturbing me. It's fine though. All right, so this is how I got the trade. So on the 4-hour time frame like this, it looks like it's a sniper. You see, focus on the red part, right? So it's a sniper on the 4-hour. That's why it looks like how the hell did you get this trade? But if you go to the lower time frames, you can actually see how we took the trade, right? And we're targeting external range liquidity, and we got the trade. So I think we're still pushing to the downside though. But yeah, it is what it is. So yeah, that was the breakdown. So coming through with market outlook or market forecast. I'll drop it tomorrow, Monday. And yeah, shout out guys. So again, follow us on Instagram. subscribe to our YouTube channel, and join our Telegram group for everything that we do. We're gonna post in there, and signals, everything, you're gonna get it there. So shout out.